My people, it's about that time.
Like a boss.
Live from the USA, hoping you get paid every day. This is the boss of Bitcoin, the Cristo of crypto. It's your boy BK. And if you don't like me, you must not like money. Thank you for joining me, everybody. Today we are looking at a major news announcement regarding the Federal Reserve, the interest rate, and of course, BTC to the USD, trying to help you profit from the greatest transformation of wealth in the history of humanity. So if this is your first time tuning in, congratulations, baby. You are now rocking with the best. My name is BK, also known as a crypto trader, and I'm the boss of these charts, as you will soon find out. Every day I grace this microphone with my voice is another day you get to profit as a result, and today is no exception. So if you haven't done it already, make sure you smash that like button and subscribe. My goal is to help as many people make as much money as possible learning about Bitcoin. I've already changed my life, and now my goal is to help you change yours. So without further ado, this is one of the ways we do it. We give away free Bitcoin every single Friday. All you need to do is leave a comment on any video I do. Every video is a new chance to win, and on Friday, a random comment will be selected, and bam! It's just that easy to get paid. So if you want to win some free Bitcoin, just shout out your city. Let me know where in the world you're tuning in from, and a winner will be selected in tomorrow's video. And so let's jump right into it. This is Bitcoin BTC to the USD. This is a daily. Keep in mind we use the boss method. That's 3 simple moving averages, a fast, a slow, and a medium. And between the 3 of them, we're able to triangulate the energy. Now, one thing I will say, this chart is basically comprised of 2 different cycles. Everything to the left of that line is our first super cycle. This was between 2016 to 2019. All the way up, it went from like Bitcoin, what, like 300, you know, something crazy when it was, look at that, 300, Bitcoin 300, all the way up to like Bitcoin 12,000, right? And then crash back down to Bitcoin 3,000. And now we went from Bitcoin 3,000 up to Bitcoin 70,000. Crash back down to Bitcoin 15,000, and now we back up to Bitcoin 60,000, right? So essentially we have 2 cycles playing into where we're at right now. The most prominent being this last growth cycle from 15 to 60. And these are the different support lines. We have a major support coming in at 50. And if, you know, Wall Street sells off 20-30%, Bitcoin falls short of completely rebounding here and sells off, we got almost a kitchen sink catch basin right at 50,000. I do not think that given this cycle just now, I don't think Bitcoin will be selling off more than 48,000. It's a lot of money coming in, short, intermediate, and long-term money that will be buying at that price. Right now, we're in kind of like limbo land, where Bitcoin has a scenario where the whales, the institutions, the countries, the fiduciaries, the banks, the governments are accumulating it at a rate that has passed the day traders and the hedge funds, right? So last time this happened, normally the market responds favorably. Like, it's like you don't swim against the direction of the whales. They set the current for the entire ocean. So last time this happened, I think, was down here at like Bitcoin, what, 20,000, 27,000, where we kind of sold off into a major increase from the whales. And you see what happened to the chart. And if you go on this side, it happened again right here. This is kind of similar to our scenario where we had a major run, kind of a slight sell-off, not as extreme as this one, but still, it sold off to 41,000. That's where that intersection was. And within, it looked like, what, 2 months, it had already jumped back up. Now, I think our scenario is a little bit different. It's a lot happening in the markets right now, and that's what we're going to talk about with the Federal Reserve. I think a lot of money is tied up between BTC and, fiduciaries. And so the Federal Reserve interest rate, if you don't know, now you know. This thing just was announced today. Federal Reserve lowered the interest rate, made money cheaper, more accessible by 0.5 percentage point. That's a lot. Normally they do 0.25 percentage point moves, and they said this is the first time they cut it like that since 2020. And so you can see his little smug smile, this guy. They said the Fed cut the lower rates, federal funds rate into a range of 4.75 to 5, down from 5.5, which had been its highest level in 23 years, right? And one of the reasons the Federal Reserve makes those interest rates higher is when the economy is essentially overperforming. So it's kind of like a scenario to where they look at the economies, they say, oh my God, we're making too much money. Like the economy's growing too fast. Let's make money more expensive. And so that kind of is what they use to, it's like a bathtub, and it's like they got the cold water and they got the hot water, and they're like, oh my goodness, well, let's turn the hot water on, instead of the cold water, and that heats everything up. But then it cools off over time. Okay, well, let's turn the cold water on, or it gets too hot. Let's turn the cold water back on. And so that's essentially what they do. They either make money more expensive or they make it more freely and easily accessible. And that's essentially what this last rate cut did by more than 0.5 point. Nearly there on inflation, they said. We talked about inflation in our last video at a press conference to discuss the rate cut. Federal Chair Jerome Powell said the decision to ease more aggressively was determined partly by the central bank's confidence that inflation will soon reach policymakers' goal of 2% annual rate. First of all, that's a lie. That's like Maury when that dude's sitting in the chair. You know what I'm saying? He said, we checked the pattern, we checked the test, and that's a lie. Inflation is up to like 7-8% a year, depending on where you live at. If you live in San Francisco or anywhere in the state of California, you're probably looking at 12% a year. I remember when I was going through grad school, it was at 4 to 4.5% a year. Since then, this thing has ballooned out of control. We got a lot of free money floating around, and and that's really what leverages inflation. Inflation, if you actually think about it, all things being equal, inflation, the only reason we have inflation in our economy is if you polarize everything. You're either rich or you're poor. You're either saving money or you're spending it, right? It's like water, right? Water, a raindrop falls from the sky and hits the ground. It has two choices. Either it's going to roll on the surface of that ground or be absorbed into the soil. Those are the only two choices that exist for that drop of water. Money is the same way. Either you save it or you give it away, right? And so when you polarize it like that, the only reason we have inflation in our economy is because the rich people are saving money at a rate faster than the poor people can spend it. And as a result, their money is removed from the economy, so the artificial money is thrown on top of that. But the poor people, the value of their money is decreased as a result. Now, rich people don't care. They don't care if, the 100,000, 100 million that they saved turned into 90 million. They still got 90 million. But when you're purchasing power and you only making, $10,000 a year, go down to 9,000, that's a huge difference. Or 100 down to 90, and then you got all these competing costs. It's crazy. It's crazy. It's crazy. It's like, I'm going to do a whole nother video talking about the different associated costs contributing to the downfall of the economy, because it's really like a shotgun approach. You really can't just point out one bullet and say, oh, that's the one that killed it. Like, nah, it's probably about 12 of them, and they've been shooting for a while, and they getting bigger and bigger and bigger. It's crazy. It's crazy, right? This is a same article, same publication. Bitcoin plunges below 60,000 on heels of interest rate cut announcement, right? This was just printed 9 hours ago. And it's more of, I just wanted you guys to kind of be cognizant of how to discern information. You know, when these major media outlets are, you know, they're in business. They're in the business of selling clicks. So they have to come up with a catchy title that gets people interested. And, you know, this one looks like, oh my God, Bitcoin's dead. It plunged below 60,000 because the Federal Reserve was going to make money less expensive. Like, think about it. That's probably not all the way true. But then they top it off. They said, although the Federal Reserve announcement is expected to be a major event for crypto's market, Bitcoin price is currently trading slightly below 60K. This represents a notable uptick from last week's when the world's largest cryptocurrency saw its worst performance since early August. Last Friday, the price of Bitcoin plunged below 54,000 after we attribute this thing to it. Like, that is not causation or correlation. I've shown you in this video, this is merely a suppression of a future extension. It's like, how long does it it's like a rubber band. When you stretch a rubber band out and it goes whoa, 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 whoa. Like, that's what we're doing right now. It's like suppressing so it can extend itself again. All the energy is coming back together so it can realign and choose the next direction. And I just told you earlier in this video, I don't see it going below 48,000. Like, right now it's at 50, it's at 62. I think it popped back up. Right? So don't let any media outlet competing for clicks convince you otherwise. Like, Bitcoin, as long as we are above 48,000, will continue to want to go up and to the right. Now, if we have a major sell-off in commodities or in oil, or if there, God forbid, you know, there's a big event somewhere, you can't even say the word, but if there's an event somewhere, or a presidential candidate is adversely affected, or his life is attempted to be unalived, you know, then obviously you got external factors in the market. But right now, all things considered, this chart is a relatively strong chart. It is still up and to the right over time significantly, and it's going to be like water. It's going to want to continue flow from the direction from which it came, and that is right here, right? It's just not going to be flowing as fast as it was. We took a little break, but there's 3 parts to any given cycle: breakout, breakdown, flatline. What comes next? 9 out of 10 times, bam, breakout. Once we make it through 68,000, we go hit our head on 120. That's what Bitcoin does. It's done it time and time and time again. So I say all of this to remind you just to be cognizant of how you interpret this information. This is the most important chart you need to know. The boss method, when all the chips are down, this is one of the best statistical forecasting methods available and accessible to you. It's 3 simple moving averages, a fast, a medium, and a long. And the long is really where you start to see the pattern come in. It's like 2 beats 1. Our quick is already flat. Our medium is down. Our long is up. We have a bullish divergence. That means all of this money right here is just going to start to come together. And at some point in time, it's going to want to do that, right? As long as we don't have another major sell-off that does that. But the problem is we have energy coming from long and short term. This is our long-term energy right here, right? Boom, boom. That's our long term. That's support right there. Still coming in from 2017. And then we got our medium term energy coming in right here, right? That's where the cap is right there. That's locking this thing north of 49,000. Do you see where that green band just popped in? That's the money zone. That means once it gets above it, it doesn't want to go below it, right? And then we got quake energy right here. And that's locking this thing in even higher, right? And that's saying it doesn't want to go below 55,000. And we see that already. When it tapped that line, it got bought right back up. So you have 3 major cycles all telling the same story. And oh, by the way, if you don't know, now you know. That is how you trade like a boss. So if you appreciate this content, I most certainly do appreciate you. Hit that thumbs up button for me. It goes a long way to get this message out and to help people understand how to trade, how to discern information, and really, most notably, how to correlate, the Federal Reserve and their, quote, control over the economy more accurately. It's really what they do is they drive a car, the American economy, the global economy, looking through the rearview mirror. They say, oh, the last 18 months, this happened. Now we need to do this. As long as that is your strategy, if you want to drive a car looking through the rearview mirror 9 to 18 months ago, the only thing that's going to happen is you're going to be guaranteed to crash that car. The mirror light might look great, but for all you know, it's an 18-wheeler right there in front of you. You have no idea. And I think that's what we see right now is the 18-wheeler is the US dollar, and it's on a head-on collision with something. I just don't want to be involved with it. So I'm going to derail from this situation. I'm going to switch over to BTC, where we have decentralized authority, where we have trustless autonomy, and where we have the future of finance. It is much more viable solution for conducive to success for the rest of humanity. And I think, that's why I'm dedicating, as many days as I have on this earth to empower as many people as possible, on this mission. And this is how we do it, right? BTC is the future. Federal Reserve is, the good old boys, the Jekyll and Hyde Club, the creature from Jekyll Island, 1916? The billionaires, you know what I'm saying? They say, hey, the American dream might be dead, but it's alive and well for this select group, right? But therein lies the opportunity. I think as long as we understand, their actions and take them as they decimate them, in the various channels, this guy's smug grin doesn't seem to be going away anytime soon. So, all things being equal, let's just take it for what it's worth. They said, keep the party going. They said, They said, let's make this money a little cheaper. Let's get Facebook stock back up. Let's get the Magnificent Seven back making some money. NVIDIA up 1,000% in 3 years. Let's keep them rolling. Let's keep our stocks up so people forget about Bitcoin. That's what's happening right now. It's literally an arms race on who can make more money faster, Bitcoin or Wall Street. And the Federal Reserve controls the rate of wealth acclimation for these Wall Streets. And it's not really wealth, it's more paper money, because all the companies are doing is they're getting low interest loans. They probably get loans at what, 1, 2, 3%. When you borrowing 300, 400, 500 million, they ain't charging you, maybe now they might be charging like 5, 6% based off that Federal Reserve. But they're getting like the lowest loans possible. I think when I was coming through Notre Dame, it was like the risk-free interest rate. And I'm like, how does that even work? But it's like, no risk, just take the money. I'm saying? So that's what's happening. But then these banks, these companies get the money, and all they do, they supposed to go develop R&D, coming out with some amazing new technology, change the world. All they doing is going out to Wall Street and buying up their stock. So they buy out the regular people, push the price up, increase the value of the treasury, of the shareholders, common A preferred. And now you got a situation where it's just siphoning wealth from the general population. And, that's how this game has worked. That's how it will continue to work. But we have a more viable path, through that which is blockchain technology. So if you appreciate this message, I most certainly do appreciate you. I'm going to keep this thing on wheels and keep on rolling. Thank you for joining me. With that being said, it's that time of the day. Signing out. Boss. Boy BK, no matter where you stay. Brazil to Bay, California, all the way back out through Germany. Good night, good morning, and good day. Thank you for joining me. Thank you for your time. Hit that thumbs up button for a player one time. Do that for me if you appreciate mine. Till we meet again, stay cryptic, y'all. Peace.
Like a boss. Huh?